Welcome to this video, which is about the benefits of investing in stocks. Hello, I'm Peter Martin with Trading 212, and I thought I'd talk a little about the performance of the stock market, which historically has tended to compare favourably with other common forms of investment. Let's look back over the last 10 years or so. Let's go back to the global financial crisis of 2008. Now, following that, the world's major economies entered an extended period of growth, and this was reflected by an extended bull run for the major stock index benchmarks. The UK's FTSE 100 index, for example, went from being below 4,000 back in 2008-2009 to spending most of 2018 above 7,000. The Dow Jones Industrial Average has performed even better. If we go back to its lows in 2009, it was below 6,500. In 2018, it has broken clearly above 26,000, so it's more than trebled in value, so that's quite a staggering amount. To illustrate things further, let's take a look at an individual UK stock. So let's look at a FTSE 100 component, and let's look at Prudential PLC. Now, I haven't cherry-picked this to give me the best numbers. I've just picked a household name that's in the FTSE 100. So let's look at what its share price has done going back over that kind of time frame. So let's go back to March 2009, and let's say that you had £1,000 that you wanted to invest and you were keeping an eye on the market. Well, Prudential back then was at 200 pence a share. But let's not say that you bought your shares then, because those are near the lows and that seems a little unrealistic. Let's say that you kept an eye on it then, but decided to hold off for a bit just to make sure that the recovery kept going on. So you held off till the next summer. Let's look at it in July 2010. The price of Prudential then was 500 pence per share. So let's say you decided to invest your £1,000 then. So it's £5 a share and you've got £1,000. It means you're going to be buying 200 shares. Now, just to keep the numbers simple, I'm excluding transactional costs. So I'm excluding things like commission to a broker, stamp duty, things like that. So you buy 200 shares in Prudential. Now let's fast forward to August 2017. Now, August 2017, Prudential was trading at £18.50 a share, and you decide you're going to sell out and take your profit at this point. So you're selling 200 shares of Prudential, it's £18.50 a share. That means that your investment is worth £3,700. So you spent £1,000 in the first place and you've got back £3,700. So you've made a profit of £2,700. That's a return of 270%. That's quite a remarkable amount. Especially when we compare it to what you might have got had you decided to just put your money in the bank. Now, over that whole period, the UK base rate was never any higher than 0.75%. Now, let's say that you'd managed to find a savings account that paid you 2%, you'd have been doing very well. But it doesn't compare in any way to the kind of returns that were available from the stock market or from this example of what you might have got from investing money in Prudential. Now, obviously, we have to bear in mind that stocks can go down as well as up. There's no guarantee that past performance will be reflected in future performance. This is just an example of the kind of returns that were available over the last 10 years or so. Now, having spoken about paying commission to a broker, you may be interested to learn that Trading 212 is the UK's first zero commission share dealing service. So talking about investing £1,000 in Prudential, if you do that transaction through Trading 212, you'll be paying no commission. It's zero commission share dealing service with Trading 212. And when you deal with Trading 212 through their platform, your deals are routed directly into major exchanges such as London Stock Exchange, or Deutsche Börse, or Nasdaq. That's just a quick discussion about the benefits of investing, or some of the benefits of investing in stocks, and the kind of returns that have been available over the last 10 years or so, just by looking at a simple example with Prudential. I hope you enjoyed the video. If you did, please hit the thumbs up button and give us a like. Or if you've got any feedback, why not send us a message in the comments section? We do read through every comment that comes in there. And we will be uploading new videos about investing on a fairly regular basis. If you hit the alarm bell icon, then you'll get a notification the next time we upload a new video to YouTube. But that's all for this time from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.